A shortage of containers and so-called slow steaming tactics by shippers to save costs have been worrying traders and freight managers at the Sino International Freight Forwarders Conference. And they look to a near-term future where pricing and the cost of freight are by no means certain. International freight rates, just where they're going, have been heavily on the minds of international freight forwarders who have come to this conference in Hong Kong. And they've also been on the mind of Ann Walders of TradeLink International.
Martin, freight rates have already gone screamingly high. Over the last 18 months, in fact, they've increased between 45 and 55% between China and North America. That's largely attributed to the economy that started to fall in 2008. Vessel capacity being removed from that trade route and basically ships parked in the Bay of Singapore.
So the North American and Canadian markets are beginning to really move along, are they?
Well, at this point right now, we feel that people are sort of holding their breath. No one really knows what will happen for this Christmas season. It's like looking into a crystal ball. There has been orders placed. A large amount of cargo has been shipped over the summer, and over the coming months will continue to do. But no one really knows how well it will sell. And yes, the freight rates and the increase in them are having a large impact on that, I believe.
So is the prospect of slow steaming really going to continue?
Absolutely. Slow steaming is a CO2 emission situation, and with all the green initiatives that are out there right now, slow steaming, I believe, is here to stay. The major steamship lines have also indicated that they'll take the profits or the leftover money from the slow steaming and they will reinvest into new fleets, new container fleets, that sort of thing.
So Anne, does it mean that you're bullish about the market right now and really looking forward as well?
No, I still see hiccups. We still have a very weak U.S. economy. Economists are saying that North America will have another dip coming the new year. So no one's bullish at this point. Again, everyone's holding their breath situation to see what happens.
And is China really the market to look at right now?
Yes, the China market, although they said that it wouldn't, it has happened where it's double-digit increase in volume over the past 6 months. And that's where the world is looking at the China market, that's right.
So when we're looking at freight forwarding, we're not just looking at the export trade from China, but also at the consumer market there as well.
Absolutely, yes. It is a consumer market because most of the products that come out of China are finished products, largely for the upcoming Christmas season. Yes.
So you see the China business really moving ahead from your company's point of view.
The whole of China, I have to say. Now that the production has moved somewhat from the periphery of China up into central and northern China, places like Chongqing, they are a going concern. That's where all the manufacturing is happening right now because it's a consuming market on the outside of China.
And Hong Kong's prospects really look quite good where it comes to freight forwarding.
Absolutely. Hong Kong is called the gateway into China. That being said, we are hopefully in the next 6 months we'll be opening up a TradeLink division in Hong Kong in an effort to bring us into mainland China later on, hopefully a few more offices, one being in Chongqing.
So having attended this conference, would you say this is a much bigger event than it was last time?
I would say it's not bigger, but I would say it's extremely well attended for the economic situation. It's as big as it has been even in the peak periods. I think we have some 1,400 attendees at this meeting. And there are some other networks around the world where we've been hearing that they're very poorly attended because the organization and the caliber of the freight forwarders that attend this one, I think it stays up there.